This one's really good. It's 13 trades taken. And he had 2 winners and he was slightly profitable, which is a really good sign. When you see that stuff, I mean, especially consistently, you're really on the verge of eliminating some stuff that can make a huge impact. Yeah, good risk management. Yeah, I mean, it's not even just that. It's like when you see that start to happen, like there's some things within those losses that you can learn from. And when I tell you this, guys, like I can't even tell you how many times, and it's been from snapshots, it's been from the data and market biofeedback, where people see something, they're in that stage too, seeing, I'm sharing my screen, just give me 2 seconds here. They see something like this, where'd it go? And they see something like this. Everybody see my screen? The one with the trade journal here. And they see something, you have something like this. I mean, and just so everybody knows too, this is what I do for my copy of the journal. I don't know if I'd be able to do it here because I might not have access here. Oh, I do. So I space my charts out. And the reason why I do that is so it doesn't get clunky like this. And it just makes it easier to read. So I space these out so it uses one line. Let me see. I can probably make those smaller. And it just organizes the information a little bit easier. You'll see what I'm saying in 1 second when I fix the other one. They all just push up. Or maybe, oh, you know what it probably is? Is market biofeedback. What am I missing here? Steve, what am I missing here? Because when I do that on my, do I have to do it before you enter these in? Because usually when I do this and I space those out a little bit, oh wait, is it that one? Am I missing something, Steve? Well, either way, like I space mine out like this prior to pasting the snapshots in there. And then that way there's not these huge spaces. It keeps everything single spaced. So I'm not sure why. It's because the market biofeedback. Yeah, so that might be why too. But either way, that's all good. So we can take a look at that. We can take a look at the snapshots, because one thing I really want to talk about too is like the right way to do stuff. And we can just start back testing what we have going on. But when you see something like this, right, you can see right here, 13 trades taken. And I'm going to put my mouse highlighter on so everybody can follow on to what I'm talking about. Like back testing, like these sessions, it's funny, right? Like, I'll talk about, a live trading session and we'll get 150, 200 people on the call. I'll do a live charting session. We'll get 150 people on average. Do you know what call gets the least amount of show up? This one. Are you guys able to even see how many people are on this call right now, or is it just me? Just me? Okay, 33 people on this call. And it's funny to me because this is the most important part of trading. Like this is not like live trading isn't going to make you a successful trader. Watching me mark up charts and sharing those with you, that's not going to make you a successful trader either. You might pick up a couple of things here and there, but it's the trade journal work. It's the back testing work. That's what's really going to move the needle for you. And if you don't have to take my word for it. Talk to any successful trader in this community. Literally, like when I'm not BSing you here, the NFP calls, we average, like low side, it might be like 150 people on a bad NFP session. Sometimes we've seen a couple less, but usually those were like 250 people, 300, like people would show up for those. The live markup sessions or the calls I do in like the FTME group, 100, 250, sometimes 200 people. When I was doing them in the EasyFX Trading main website, we'd get like 200, 300 people, and it was like steadily growing just to watch me mark up charts and talk about certain topics. This call on Thursday, which is the most important, hands down, out of any call I do, never breaks 40, 50 people. trade journaling is changing my trading massively. Yeah, I mean, there you go. I mean, like literally, like this is what's going to do it for people. And it's just, and it's, props to you for showing up to this call, because this is the stuff that like is required of you to be a successful trader, consistent trader, doing that grunt work, doing the stuff that, is not pretty. Everybody would much rather look at a chart and go over a topic and talk about structure, a top-down analysis, than look at spreadsheets. But you have to fall in love with the spreadsheets just as much as you do with the charts, right? Like I talked about the other day, and there's people in the FXU who are in this group. Just to give you some perspective, we have 8 weeks of modules, especially week 7, week 8. I think week 8 or week 7 has like 8 or 9 modules, and week 7 has week 8, I think it's like 7 or so. Some of the weeks have 9, whatever. It's all different, right? Only 2 weeks are talking about chart stuff and strategy stuff, right? That's just should give you some perspective of like the big picture here and what's involved. So like this stuff that we do today on these calls, I mean, this should be the one that people show up the most for. We should have the biggest turnout for this call, but that's just how it goes. And we've even had people drop off since being on this call. It's 5 p.m. in the UK and some people are finishing work. I mean, if this was NFP, everybody would be on. If I announced, this isn't just a today type of thing, man. This is consistently over like the last 2 years, and it's always been like that. If I announced that I was trading live right now, there would be a much bigger turnout. I can almost guarantee you that. I would make a healthy wager on that. But it is what it is, right? So you're here, hats off to you. But this stuff is just very important. Like if you're not back testing and recording data properly in all areas, like it's just not, I'm going to record in the, my trades and throw some snapshots in there. If you leave out the market biofeedback, stop wasting your time. It's not going to work. Like you have to do it all. And then you have to be able to back test each of those 3 things individually and then perform a SWOT analysis to extract your strengths and weaknesses, right? I showed a flow chart the other day showing you the process, showing you the roadmap of getting to that end goal of whatever it is that is for you. And this is a huge piece of that puzzle, is being able to record your data effectively and be able to back test it to really extract what you're doing well, what you're not doing well, what patterns you're best performing, which are the least, time frames, pairs, like you name it, right? Like there's a lot of key information. I'm actually going to pull that up. I don't even know if I have that here. I used to do a lot of coding. It's kind of like expecting to write out a perfect app in the first go and then quitting when there's an error. Yeah, I used to decompile stuff and code on Visual Basic, and it's very much, I can heavily relate to that. I used to actually love coding. I was really good at it too. I'm just going to pull something up here that's going to help me go through this, and then we're gonna run through this journal. So this is a guy who has been with us for a little bit. Big potential, and I like seeing this. He has 13 trades, 2 winners in that result. So like I was saying before I kind of got off track there, is when you see stuff like this consistently where 13 trades, 2 wins, but slightly profitable, if you eliminated, let's just say 3 of those trades at 2% each, that goes from 0.43 to a 6.43 positive for the month. Like it can make a huge impact, especially on a $100,000 account, right? So I've seen people be able to do it just by what they identify in the market biofeedback, whether it's certain fears or emotions, right? Like there's back testing that's involved with that. I've seen people do it with just simple things, not even regarding the charts. I talked about one the other day where Janik, some of you know him, some of you may not. I met him in person too. He's a good friend of mine. I met him through one of my like first trading partners ever. And, he could just see bearish environments very well, but he would buy and sell, but his sells just outperformed his buys by far. And eliminating the buys, because that was one of his weaknesses, and focusing on his strength, he was able to just blast off and become a consistently profitable trader, move into that stage 3. So it's just, I've signed up through him in the previous group. Yeah. So him. So, he's a really good trader, very disciplined guy. He's just really good. And he was able to just make one adjustment. And maybe you've talked to him and know exactly what I'm talking about. And I've seen that happen with so many people. It's just one thing. And for the most part, it's not chart related. That's why backtesting is so important. Like, I mean, I guess that one is kind of chart related, but like, I'm talking like strategy related or execution related, right? I mean, it can be one thing, one little simple thing, and, not effectively backtesting your data, that can keep you stumped. So, doing this process the right way, recording the data to the right way as well, you can put your finger on something that can have a dramatic impact on your results and literally send you flying. But people not doing this process correctly, they spin their wheels. And first, go-to is, I need more market knowledge. I need more strategy knowledge. There's something that I'm missing. Anybody relate to that? Spinning your wheels, feeling like you're not getting traction, and think that you're missing a piece of information. That is the number one trap. We see it all the time. I'm sure most of you can relate to what I'm saying right now. And what happens from there is most people, they just dive into the information more, trying to find an answer within the way they're marking up charts or executing trades or the patterns that they're finding. And if they can't find the answer there, which they won't, they go into and jump to the next method or strategy. Nobody relates to that? If you relate to that, drop a 3 in the chat. Like, the answer is not there. The answer is not there. If you've been around me for any length of time, you know I say it all the time. The keys and answers that you're looking for are found where, chat? Where are those found? It's not in more trainings. It's not in finding, getting more, market knowledge or strategy knowledge. It's in the data, right, Mia? It's in the data that you're collecting. You just have to find it. That's why this process is so important. That's why this process is so important. So I see a bunch of 3s. So if you relate, just know that those aren't the answers. Like, digging more into, the strategy and the trainings, or, a different educator to try to find and I understand completely that some people just mesh with other people, and that's perfectly fine, right? Not everybody is gonna take to me or my personality or my way of teaching. And I recognize that, right? But, jumping from educator to educator or course to course or strategy to strategy, that is not the answer. That is not the answer. That's chasing something that you think is the answer, and it's not. Okay. I got sidetracked here. Let me just pull up this one thing. I got something here that I'm going to use for this back testing. Sounds familiar. Back into the books. Well, and here's the crazy thing with that too is, who knows the crazy thing with that? Like, why do people fall to this trap? And does anybody know the answer? Does anybody know the answer why people stay in that trap? You don't know until you don't know. Well, I mean, it's because it feels productive. You're right. It feels productive. You're doing a lot of stuff. You're watching a lot of trainings, and you're marking up the charts, and you're dedicating a lot of time, and you're staying plugged in. And it's feeling productive, but it's not zeroing your energy on the thing that's actually going to move the needle for you. And the crazy part is, like, recording your data and back testing all of those 3 things, the data, the charts, and the market bot feedback, and using a SWOT analysis. Like, when I first started trading, like, I didn't even know what any of that stuff was. And I talk about it pretty frequently. And like, when I linked up with some of my now, good friends, and they were mentors when I first started, and they showed me this stuff, and I was just like, man, why is nobody talking about this? Like, what, why haven't I been shown this stuff? Like, what, what's up with that? And then, I never was doing it. And guess what my first reaction was? Like, I don't want to do it. Like, nobody wants to, trade journals, and it's just, it recording everything and, back testing it all. It's a pain in the ass, and it's tedious and it's time consuming. But I also recognize, and what you need to recognize is that short term. This is something that's temporary. This isn't part of everyday trading. This is just helping you transition through the stages of a trader's evolution, because you're not going to come in and learn something and dig into the education and the trainings and then jump on a demo, test out what you're doing, and then expect to see good results and then take it to a live account. That's people with the anticipation that they can do that in stage 1, jump over stage 2, and just land in stage 3. You cannot jump to the top of the mountain. You need to climb the mountain, and that is going to take some time. It's going to take some skill. It's going to take some patience and discipline. It's the only way to the top of the mountain. So let me just speed over here, and I'm just going to pull up this document. Yeah, I mean, it's just do that now. And then, trust me, I still document and I still review, but it's not anywhere near as tense as what it was when I was backtesting, trying to find my edge, or, my identity as a trader, or my best trading style, right? Like, I know those things now, right? Now it's just, more holding me accountable, right? And it's part of running a successful business, successful. That's like, EFX as a company, getting to a certain level of success, and then all of the data and, recording and whatever we did in the systems and the processes that got us there, that we just don't do it now that we arrived. And you never want to feel, like you've arrived. So I'm doing it to hold myself accountable, and I'm doing it to just, make sure my numbers are up to par. I'm doing it to, if there's, I'm not immune to losing streaks. I've opened up my last losing streak, and, just that data can help you put a finger on things. So, it's a temporary thing that you're going to go through now. And once you get to the other side, it's a beautiful thing. Then it's just a whole different level of confidence. You start trading in the zone. And it's just, you reap the rewards of all the hard work. So I got the things up now. I wanted to pull the important stats. I'm going to let you guys take a quick snapshot of this. This has been shared in the Discord. This has been shared in multiple of the backtesting live sessions. I'm just going to pull that up, and I'm going to give you it again. And I want you to take a snapshot of this. Okay, take a snapshot of this. Most of you probably already have this. Like I said, you can find this in multiple places in the Discord. I should probably make this a cheat sheet, but you need to take a snapshot of this. This right here are just the important stats that you want to pay attention to just when backtesting the data. This isn't talking about snapshots. This isn't talking about backtesting the market biofeedback or SWOT analysis. This is just data that you need to extract, because this is where, an important strength and weakness can be found that can make a huge impact on your end result. Will be a bit complicated on the beginning, but watching Dane's recordings from Thursday session will help how to go through that. I'm learning the journal and yet to backtest, not enough data yet. I think I know how backtesting works, but I haven't seen it live yet. Yeah, so I mean, I'm also limited too, because like a time thing here, and it's everybody got a snapshot of that. I backtest, but I don't know it. So, I mean, all you're doing is you're extracting your strengths and your weaknesses, but you have to use this. That's all you're doing, right? With your data. And when I refer to data, I'm referring to everything I just showed you, like the stats, this stuff here, and all the things that are populated down here, right? All of this stuff, right? All of this stuff, right? You're looking to see, right? Like this should give you clarity. If you don't know how to backtest, this is what you're looking for this, right? Some of this stuff might not apply because you're in stage 1, right? But you're looking at, correlating losing trades, right? do you have the directional bias correct or incorrect with those winning or losing trades, right? What does that tell you? If you have a losing trade, but your directional bias was correct, what does that mean? And same thing with a losing trade, but an incorrect directional bias. What does that mean, right? That's what you want to dig into. So if you have a losing trade, but the directional bias was correct, it could have been, yeah, it could have been you missed something, right? It could have been, what you saw was manipulation, but wasn't manipulation. There could have been imbalance underneath your entry point of interest. There might have been liquidity. You might have misread something, whatever it might be. But getting the directional bias down, that is a key aspect. That's one of the biggest key components to having consistency in trading. And then you can go back and look at what you missed. Then you can learn from that, use that chart, work on your pattern recognition, and then apply it to the next one. Same thing with a losing trade with an incorrect directional bias. What is the reasoning for that? Did I misread structure? Did I misread the manipulation? Was there manipulation? Where was the higher time frame targets? Did I have higher time frame alignment? Whatever that might be, that's what you're looking for. And same thing, I'm not going to go through all of these stats, but just to kind of give you the gist of it, right? Best and worst performing pairs. Maybe you're absolutely getting smoked on gold. I recommend you don't trade metals, indices, cryptos, exotics in stage one. You just shouldn't, right? But let's say you got a bunch of GBP pairs and you're a bunch of US majors. You're performing very well. You're reading AU, for example, very well, and you're getting smoked on GBP pairs consistently. Eliminate those. Focus on the ones you're doing well. Same thing with patterns. Maybe you see flag patterns with manipulation very well, but signature patterns and bypass patterns or whatever, you just can't see them. And or you see them and you don't, or you think what you see and you just don't trade them effectively. Whatever is giving you the best results. Remember, things were doing well, things were not doing well, right? We're looking at buys and sells, the information that I already talked about. We're talking about best and worst performing execution. What is historically the best execution for most people early stages is limits, because that's going to eliminate a lot of second guessing, hesitation, fears, and emotions that cause bad, negative, impulsive decisions, right? Because you look at everything, you map out your trade, you have your confirmations, you set a limit, and then you go about your day, maybe smack some alerts on there. When you're looking at market execution, you're watching price come to the entry, and maybe it's coming too fast, and that makes you second guess and dismiss every single confirmation you have up to that point, right? So for most people, market execution is going to be their least worst performing method of execution, and typically those pending sell limit, buy limits are going to be the best, but that's going to be different for everybody. That's what you need to find out. And then we're talking about best, worst performing time frames, market session, time of day, time of week, time of month, best, worst performing chart patterns, best, worst performing market environment, right? Trending market, reversals, continuations, corrections, right? Everybody's gonna be different. We can all apply the same concepts. Look for the same type of things for entries and targets and balance and whatever it might be, but we're all gonna have our own, strengths and weaknesses within that and apply it differently. That's why this back testing is important, to find out what you're seeing and doing well and not well. Right? So then we're looking at stuff like this. These can be a little bit more, these stats and what you're recording them for is a little bit more complicated, right? Why is average target, average stop loss, average risk to reward important? Can anybody tell me? Why are those important? There's a couple reasons. Like all of this stuff here: average targets, average stop loss, average risk to reward, average percent gain per winning trade, best worst performing stop loss size, best worst performing risk to reward. Who can tell me what the significance of these stats here are? There's a couple things. Win percentage for break even, that's a big one, right? So for example, if you're averaging 1 to 5 risk to reward, that's your average risk to reward. The total number of trades that you're taking on a monthly basis, You're also going to know your break-even rate and your, the percentage you're going to need for, to be a profitable trader. Same thing with like the targets and the stop loss size, right? So if you see like your stop loss is 20 pips or less, like, or maybe like 10, 15 pips or less, you're getting absolutely annihilated on. But you see anything with like a 20 plus pip stop loss, a bigger stop loss, because keep in mind, stage one, we're not trying to focus on, increasing reward or getting those sniper entries or chopping up FU candles and looking at the 50%. You're working on directional bias first, and that shit comes later, like much later. And this stuff like drives me crazy because so many people focus on the wrong thing in these early stages, and then they wonder why they're getting stuck. So if you see yourself getting smoked on these lower stop losses, right, and you see better results on 20 plus size stop losses, right, that's key information that you want to extract and then apply to your trade plan, which would say, if this has a stop loss that's under 20 pips, then I do not execute this trade. Same thing with the average target. Are you averaging, what targets are you averaging on your 1 to 5 risk to reward that's going to give you a break even rate at 17%? But which ones are you performing well with? And because keep in mind, we're talking about being static here. These things can change. There's a lot of variables, taking partials or whatever it might be. So if you have 1 to 5s that, let's say average 50 pip targets, okay, you have 10 pip stop losses and 50 pip targets, and then you have another scenario, let's just say 50 pip stop losses and 250 pip, 300 pip targets. Those are two different examples of 1 to 5 risk to reward. You're going to know that you need at least a 17% win rate with that, right? Without taking partials or interfering, which is another thing you shouldn't do stage one. But how often are you hitting those big targets? How often are you actually, like, what is your average percent gain for those winning trades, right? Because keep in mind, those numbers are only going to play out if you're achieving targets there. So if you're not, hitting those targets, which most people early on, they want to interfere. They want to micromanage their trades. They want to get involved. When trading is one of those professions that's usually, you're going to see the best results with as little interference as possible. But you got to know these numbers because that can dramatically impact the bottom line. Let you know what time frames you're better on. Yeah, that's another big one too, right? Stage one, stage two, you shouldn't be doing anything less than 1 hour time frame. These things that we're talking about here, yeah, it's gonna be a pain in the butt, but like our trade journal tells you all this stuff. It's not like, we're doing this manually anymore. Our trade journal is specific to our strategy. This is gonna tell you everything, right? One thing I probably will have him add into this is, the win percent and losing percent for the actual patterns. But that's why, like here, the pattern, right? Signature, right? You can see his patterns he's mostly focusing on signature patterns, but you can see, you can select all the different patterns. So we need to add another pattern in here and do a couple of things with that. And we're going to continue to, this trade journal is going to continue to evolve as well. So, but a lot of it's done for you and tells you all these stats that we're talking about down here, right? Average risk to reward, average stop loss, average TP, right? Right here, average stop loss, 24 pips, average TP, 140. You can see, you can click on different things and have it show you different percentages, right? So you can see his buy limits. The majority of his trades, you can see he's favoring the buys big time. And we can see the wins and the losses. And we can also see his directional bias if they were, so you can see for his directional bias for the buys, which he's favoring, he has 8 correct and 2 incorrect. So that's, you can see right here, 80 correct and 75, or 80 and 75. So you can see he's favoring the buy. So that could be some key information here. So everything's here, right? Like all those stats, everything's here, right? Like time frames. Look at the time frames you're doing well with and which ones you're not doing well with. Here's the pairs. It's going to show you the same thing, which ones you're doing well with, which ones you're not. And then what you do is you perform a SWOT analysis, you make a summary. So you can see here, all in all, he's talking about the different things that he's identified. That happens here. And then goals for next month, those are the things that you're making the changes to in your trade plan to apply to that next sample size, right? Trim pairs. Deep down, I think I might have too many. So let's see what happens to results if I drop a few. Focus on trades with higher time frame expansions, with clear manipulation, right? All these different things. That's what you're doing. And then you make changes. And then you're going to see your results make a shift. Does that make sense? So he doesn't have a ton of data in terms of like actual charts here, but I do want to look at the snapshots so you know how to document these, because here's an important thing. How do you change the time zone on the spreadsheets? Mine is 3 hours behind Eastern. Steve, are you on here? Steve is my go-to man when it comes for tech questions with spreadsheets. Can you help him with that question? How do you change the time zones on the spreadsheets? Because I don't know the answer to that. Thank you. So here's something important, right? When we talk about snapshots, and keep in mind, when you're back testing, right, you're doing that when? At the end of a sample size, whether that's 20, 25 trades or at the end of the month. So early stages, you're going to typically trade more pairs. It's going to be a broader range of criteria that you're kind of throwing it all into a funnel with a filter, and you're extracting those strengths and weaknesses. So everything is going to get sanded down. So it's going to look completely different. The pairs you trade, the timeframes you trade, and all that stuff, the patterns, it's going to look completely different in stage 1 and stage 2, right? It's going to be a lot less of everything, more focused. So keep in mind, like early stages, let's say you have 20 trades, and then you circle back at the end of the month to trade 1. What do you want to see in your snapshots? Because keep in mind, you want to make your job easy. The last thing that you want to do is take snapshots and have no idea what the surrounding environment looks like or the higher time frame. So he's actually added higher time frame before and afters as well. Some people like to do before, middle, and after, so they can see the price action between point A and B, so they can get familiar with the in-between part of it. But keep in mind, so here's his first trade. So after the month rolls around, let's say like here, he's taken 13 trades and he circles back to trade 1. You want to be able to pull up a snapshot and know exactly what you're looking at, why you took it, what type of pattern it was, the confirmations, and the surrounding environment. So I'm just going to pull up his and see what they look like, and we'll go from there. Because most people don't do this the way that they should. Okay, so he has a straight up markup here. He has a little bit of text here. Let me look at his higher time frame before. And you can't forget the higher time frame. That's a key aspect of it, because the last thing that you want to do is take a snapshot, not know something, and then have to pull up TradingView, pull up that pair, and then find where that pattern is and run through the charts again and try to put yourself in that position of when you took the trade and think about what you were looking at, what you were marking up, the confirmations, and what you were thinking. So you want to be as detailed as possible when you're actually in the moment of taking that trade and documenting everything and what you're feeling and what you're thinking and the emotions and fears that are present, right? So you can see here, he's got a couple things written here. So that's what I would write. What you want to include on your charts are anything of significance. All you're doing is taking a text box, throwing it onto the chart. And I would write out, you have questions that are available to you in the cheat sheets, questions that you should ask yourself by marking charts up. You can include those on the charts and answer those in a text. You can also throw a text on these charts, maybe like the before of the actual time frame you're taking it. And here, he's got a wide open spot here. Throw a text on here and write out all his confirmations, right? That's going to help him when he's backtesting. Maybe he has min criteria, or he needs to see 5 confirmations, but this one he has 4. Here, we don't even know what his confirmations are and what is min, or what he needs to see. Like if he has 7 confirmations and he needs to see at least 5 of them to execute a trade, we don't even know how many he has or how many are actually present, right? So include the confirmations right here. And then down here, you can write like a little summary, write notes, write anything that might be, anything that you really like about this trade, anything of significance that you want to remind yourself when price comes back. Like here, oh, we have a nice manipulation candle here that led to a big impulsive move, but it also created relative equal lows. This is something that, I'm taking my entry off of, but I'm well aware of it. But for this reason, it makes it higher risk. That would be an important thing to take note of, because if he lost this trade, let's just take a look at what happened to the end result, which he did lose his trade. So let's just see what happened. Let's see if he got a bounce. So we can see what happened here. So here his after, right? It's not even showing anything after, but he did do a good job of his snapshot here of letting his price run. You do not want to take, well, let me just finish that other point I was making too. So you can see here, price came down and took out those. I'm actually not even sure we had his stop loss here. Let me take a look. So he was actually not aligned with the right thing here for entry. That did not invalidate the trade. This would here. So, but there's just certain things that you can make note of here. He could have taken note of this, what I just talked about, and then look at the after. And when we look at the after, we can see price came down through his through his stop loss, stopping him out. He goes, why'd you do this? But this is, do you see this here? A chart like this, he got the pattern right. He had targets. He got the directional bias correct. It not only came down to his entry and filled him, but it ran to his entry. So most people, what they'll do is they'll see this price come through the stop and take a snapshot. You don't want to take a snapshot of that, because then what do you know or don't know? You don't know that if the directional bias is correct, right? You don't know if this thing was just coming down, like taking out those equal lows I pointed out before running to the target. So looking at this data that we have just on this chart, we can see that his directional bias was correct. Price came up and ran for the previous week high and hit his TP, but there was something that he missed. There was something that he could look at and say, where did I go wrong here? Is there anything I missed, right? Looking at this chart, here is the manipulation. He marked that up here. And then we saw an impulsive move, making this high up here. And then we can see price retrace, nice flag pattern, all the way down to this candle here. And he saw some price action forming in this area here. And he looked at this candle right here with this wick before that move. So taking something like this, it's higher risk. This is kind of what we refer to as a double mitigation or a double tap entry, where it's a pattern created inside a logical area. But if you get stopped out on this trade, it doesn't invalidate the setup. The only way this setup would be invalidated is if price exceeded this candle here. So he could have done one of two things, right? Price hasn't turned here, hasn't broken structure. He could have used that for an entry and just dropped his stop loss down to cover this low here. Or he could have just kept the entry on this and used the stop loss all based on this candle here. Had he done this, right, this trade here, what was the risk to reward on this trade? Keep in mind, 13 trades, 2 winners, and just under 0.5%. That trade that we just looked at, the risk to reward on that trade was over 1 to 8. So he did, 1% on that trade would have been 8%, over 8%, 8.2% roughly. If he did 2% on that trade, that would have been a 16% trade. It looks like, oh, he did 0.5%. So that would have been 4% in change with already what he has in the bag there, what he ended up the month with, right? That one trade there could have been the difference of a break-even month or, almost 5% month, right? That is something I would definitely focus on next time, especially if this is a common pattern. If he is looking for double tap patterns, especially if that's just something he's misreading or not performing well, but he sees it's respecting that main manipulation candle and hitting it and then running to his target like that consistently, that is a big strength and weakness that is shown in this chart that you can easily make an adjustment to. Even something like this, that could be all he needs to become a profitable trader. Does that make sense? Everybody following along that? And that we're just looking at the charts right now. We haven't even looked at his data. We haven't even looked at his market biofeedback. And more often than not, with the market biofeedback, most people record this incorrectly. And another big thing I do notice with the market biofeedback is the majority of trades that people identify negative thoughts or emotions or fears or feelings, but still take the trade anyway. So there's one person that just always comes to mind when I think of this. There was many, many months of data that we backtested. This was somebody I was working with privately, and we removed every trade that she felt some type of way about. Like, she identified in the before enough in her mind to not execute the trade, whether it's lack of confidence or, feeling anxious about the trade because she didn't have a lot of confirmations. If we removed all the trades that she identified with some type of negative emotion or fear or whatever it was prior to the trade, she would have had consistent profitable months. It made that much of an impact on her bottom line. So before the trade here, he was feeling calm and neutral about this trade, would have liked a break of structure. You guys just see what I meant? You guys just see what happened there? Exactly what I just talked about just happened in the first one we read. You guys just see what just happened? Look at his chart in the double mitigation, double tap pattern that we saw, which I said didn't break structure, hasn't started to run yet. He identified that. Would have liked a break of structure from the reaction to the 30 minutes. So that's caused a little bit of doubt in the back of my mind. Confident in the overall bias. He was confident with the pattern and the directional bias, but he was not confident with the entry. And we that's the one thing that we picked out before we even read the market biofeedback. That's a huge adjustment. That's a huge win right there. His directional bias is on point and he's feeling confident with that. That's the most important thing. Now he has to make an adjustment on how he's executing those trades. I would eliminate those double taps, brother, and I'd focus on those candles. I would get in on those double mitigation patterns only if you get that break of structure and see that reaction that you want to see. Otherwise, stick with that manipulation candle. If he did that, this end result for this month, just with that one trade, snapshot and market biofeedback, boom, profitable end result. During the trade, I was at work, did sneak in a quick check when I had 5 and saw blue, so I was optimistic and could be the one to regain the lost lost money. Not sure why I didn't take so this is after, okay? Not sure why I didn't take the 1 hour manipulation candle. That's the one that we were talking about. Bit annoyed as that was a beauty, considering how many of my trades get stopped out like this. Ding, 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 ding. He's finding a weakness here. We've identified it prior to even reading the market biofeedback. He's already identified it in his mind. Keep in mind, this guy's got some experience with me. He's reading his directional bias. He's identifying his patterns, an alignment with structure, but he's got to work those double taps, those double mitigations. Those aren't working out clearly. And he identified it before he even took this trade. That's not a coincidence, folks. Or that is a coincidence. Let's see, bit annoyed as that was a beauty considering how many of my trades get stopped out like this, then hit TP. I'm not even sad when it happens anymore. Would have been an account saver, though not ideal. Bias target was on point, so pleased with that. So keep in mind, here he's mainly talking about trade notes. So market about feedback is, we're talking about emotions here, fears, the source of those and the impulsive or the decisions that they've forced us to make, right? Things like that. This is good stuff here for the trader's notes, but you guys see the correlation here between what he's identified, and this right here is very valuable information. He's seeing this happen consistently where his TPs are getting hit after he's getting stopped out. He has, I already know for a fact that he has more than enough information to make enough changes, right? With the strengths and weaknesses that he's already identified to become a profitable trader, just based on that trade right there and the market bot feedback. Very good market bot feedback. See, do you guys see how backtesting can be very effective? If I just taken the 1 hour FU that led to the previous week high, it would have been a win. This trade marks the first one since my routine change. I am to wake up and do my meditation, have my coffee before opening laptop, not just with my eyes and laptop and starting to mark up. I am not 100% woken up and ready to take the trade, et cetera, et cetera. Happy I implemented this, and it was it very nearly worked out. I feel I'm close to getting my consistency. Yeah, it's a game changer, absolutely. So I really want to look at another one here, where I know we're at the top, but I want to look at another one here. So he has a really good market bot feedback. There could be some slight changes that could be made there. I would include more notes on these before and after charts, but he's got a really good journal here. I'm really liking what I'm seeing here. Let's take a look at this one. Okay, so he has a pattern here. He is looking for the previous week high. He has a candle here, lots of manipulation, or excuse me, lots of imbalance below here. It's just one thing I kind of noticed here. He's looking for a retracement back into this. So let's take a look at the end result of that. This one is straight up off the candle. And then we can look at the market bar. So price reacted and looked good, breaking structure to the upside, but wasn't to be, or wasn't to break even, one of the two. This was the end of the daily expansion. Price started its retracement from here straight through my stop loss down to the FU area and mitigated the daily POI. This is where it reacted for another daily expansion. So I want to look at the higher time frame. He identified that candle too, right? So he had that stuff marked up. I'm very curious to see. So he knew after that push here, he had his directional bias right. And he was looking for it to come up. It looks like he had this area here, the 50 of the daily. So, he kind of looked at an entry up here, kind of like in pullback territory, 50 TP levels. So let's take a look at his market bar feedback. You should be really happy with his market bar feedback and his directional bias, because adjustments can be made on that. Directional bias, getting that down is just a huge thing. So calm and confident. Although losing streaks are not fun, they do not affect me like they used to. That's huge, right? Casino owner mentality, thinking in probability. That's what these trade journals show you, especially when you see 13 trades, 2 winners, and a positive result. especially when you see one trade like that first one that we went over, which could be, you know, that could be a game changer for him, just that one thing alone, right? So that would have given him a 5% month. That was a $100,000 account on FTMO, and he made a 5% gain, right? 80% of that, that's a $4,000 a month on a $100,000 account, 8,000 on it too. Okay, although losing streaks are not fun. So again, you know, he's identifying some stuff here. We have some stuff that we went over this. I don't want to waste too much time digging into the do's and the don'ts on that. We don't have the time on this one. Still using logic to make my trading decisions, not emotions. Everything checks out here, so I execute. At work, I didn't even see entry trigger. I have developed strong ability to leave trades alone, which is awesome, man. That's going to be a huge benefit to you in the long run. Feel confident about this one. Pattern was solid, target was there, et cetera, et cetera. Just a losing trade, not necessarily a bad one. So, you know, if it's following your trade plan, you have your confirmations and everything's in check, man, that's a good trade. Okay. You know, you have that second point of interest, you know, that could have been round two. Or if you see something like that, that can be a situation where you split risk or lower risk. That can also have a big impact. Let me see. Okay, so I want to look at this one. This one has, I want to look at this one really quick. We'll end it on that one. I'm very curious to see what this one is. Okay, here's higher time frame before. Is this helpful doing this? You guys like doing this? Chat's a little quiet. Okay, so here it looks like this is where he was. Okay, so this was good. Okay, this is the second POI that he identified on that GU. Remember the higher time frame snapshot on the first one? This one here, he identified that and this candle here as POI number 2. Okay, so you can see who can notice the first thing here. Who can notice the first thing? Now, I don't know if this is a double mitigation, double tap entry here, but it looks like it might be, because he's not taking this candle straight up, because his stop loss is right around the 50% of that. So, you know, this is something here. If he gets stopped out of this trade, it's not invalidating the setup. We can take a look at the lower time frame, what he actually got the entry on. Here we go, this one here. So it looks like he might have got a bounce off of the daily 50%, and then he was looking for entry afterwards. Okay, so here we go. This is his second POI. He has a nice signature pattern. Now, who can see a difference between this double tap, double mitigation pattern in a logical area versus the first one he looked at that we reviewed on EuroCAD, where he got the TP, but he got stopped out? Yeah, Giuseppe, he has a breakup structure here. So here you can see price was, you know, kind of accumulating here, right? Equal highs, equal lows. Price pushed down, hit that second POI, right? And then a strong push up, breaking structure. So that is a big difference in what he should be looking for if he's going to focus on these type of setups. So short-term highs here, previous week high also in alignment with the daily trend. He has his entry on this candle here. I don't see any fibs here. So unless this here is either the kill zone or he's marking up in balance. So just looking at this, if this imbalance here was, does anybody remember what I marked up for the turning point for the gold trade on Friday after the NFP first, you know, craziness? It was an area of imbalance inside the kill zone. So I don't know if this is the kill zone, because he doesn't have his fibs on this, which I would include here. Again, it's really important to have as much information on these charts as possible. His stuff's pretty good. I have a pretty good, clear idea of everything here, but I don't know his confirmations here, and I don't know the kill zone here. So this area of imbalance, if that was in the kill zone, I would be looking to see if there's other candles here as well, because that can easily cause a strong reaction, this type of imbalance in these moves here with these signatures. Let's take a look at his after snapshot. Was this a winner? Okay, so solid pattern, many confluences, and played out exactly how I anticipated. Just didn't quite come low enough. Unlucky, but lots of positives here. So that's awesome. Great information, another directional bias, and another target hit. But you can see, what is a couple of his weaknesses might be, right? We're looking at entries here. So the first one we looked at, he had the pattern similar to this, but no break obstruction. He should have focused his entry on the actual manipulation candle. Here, he had that imbalance marked up, but we didn't have the fibs on this, so we don't know if that was in the kill zone. So had that been in the kill zone, like let's just say the 50% of that imbalance was like the 71, I most likely would have taken that candle. I would have, you know what? Let's go look. Let's go look at that. Let's take a look at that really quick, because now I'm curious. It's a 30-minute. I think I know where. Okay, let's see. Let's go to the daily first so we can just find it. Okay. Okay, so he was looking in here. I believe it was this here. Okay, now let's drop to the 30. Here was the pattern. Let's see if I can get it down lower. Okay, so here was the imbalance. Let's go back to the 30. So 30 just shows a little bit higher, so we'll just keep it like that. I just want to see what the fibs are though. And I also want to see if there's another candle there as well. So that one was above the kill zone there. Let's see other time frames. So you can see it's 1 hour candle too. 2 hour candle. Yeah, so it kind of got ugly lower than that. I also want to take the 50% of this. That might have just been a really unfortunate situation there. Yeah, so 50% of that candle's kind of right in that imbalance. I'm just kind of curious if he took this candle. I mean, that candle was in the kill zone. He did have this candle here. I'm just curious of how much that would have affected the risk to reward. I think he had really good risk to reward. So like that's not an awful stop loss, especially on a GBP. Yeah, what you can do too, situations like that when you see imbalance a little bit higher up, knowing that could be a spot reacts from. That's kind of an unlucky break there. You can split your risk. So, you could do, if you're risking 2%, you could do 1% there and then 1% here. You know, if you miss the top one in situations like this. Let's see how that played. See if either of those would have got filled. Yeah, so that respected that imbalance. So that's kind of a lucky, that's kind of an unlucky break there. Nice flag pattern too, really nice flag pattern. Gave no retest too whatsoever. Yeah, that's an unlucky break. That really is. That imbalance was in probably the worst possible spot for him. I would have been happy with that. That's just an unlucky break there. That really is. I would have had a different approach. It just looked here. I mean, the wick made a difference here. If there was no wick on there, that would have been in the kill zone. That probably would have been solid enough to enter. But his entry, oh, you can see his kill zone right here. His kill zone, and entry, everything was good there. That's just a really unlucky situation. So tough break there. You know, I mean, he's getting some really good positive results here. His directional bias is really good. You know, the other one definitely called for, you know, some adjustments for the entry. This one was there. This one was solid. This one was solid. This one was solid. Just tough spot with the imbalance there. If that imbalance was lower, he would have been good. But that's why imbalance is really important though, because that was the only spot of imbalance. So, you know, think of what that tells you. If that's the one spot of imbalance. Imbalance can act like a magnet drawing price to it. And it can also act as a very highly sensitive area that can really send price, you know, propelling from it, like we saw here. So if you see one solid area of imbalance and then nothing else lower, that's just one thing to keep in mind. That's, if you guys remember when I was looking at it, that's the first thing I saw here. My eyes were just drawn to that imbalance. When I see one area of imbalance like that, I really like that. It's almost like jumping on a trampoline. Like price comes into it and jumps on it and then just goes flying. Too bad he didn't have a little bit more imbalance near his entry, or if that one area of imbalance was on his entry, this would have been a really good trade. That's just unlucky, but be aware of that. You know, be aware of that imbalance. If it means taking a hit on your reward, if there's a situation like that, then, you know, still like, you know, 20, 25 pips, you know, he would have still, you know, let's just take a look at that. If he took that imbalance, right? If he played the imbalance for the entry there, I think we already lost it. Let's see. Where the heck was it? Right here. Yeah, so it looks like it came to the 50% of that imbalance. Looks like it came to the 50% of that imbalance. So even with that, that's a 26.7 pip stop loss. He would have still got over 5 to 1 on 1 to 5 on that. So sometimes taking a you know, a little bit of a hit on your potential reward, you know, can make a big impact of, you know, reducing that potential reward or just, you know, missing the entire trade. So that's kind of a tough break, but a lot of stuff here is just tweaking and fine tuning and making some adjustments here. You know, just what I'm seeing with his market bar feedback and his directional bias and like the notes he's taking, you know, he is well on his way. Like we're talking about like minor adjustments here, like that can make a huge impact. Like those two trades right there, you know, definitely the first one that could have been a huge, you know, a 180 on this end result. With that one adjustment there. And we only looked at a handful of his trades. He's got 13 here. So I guarantee you, if we were to travel on this route, we would find a lot more valuable information, probably all based around execution and entry. Like that's the one area that I'm noticing right now with him is his entries and like execution and the method of it. Really, yeah, it's a good journal here. I think there's a lot of valuable information here. And I would not be surprised if there was more information similar to what we've already looked at that could be a huge game changer from him. So I don't know if all that's accurate. Yeah, especially 5 trades taken, -1. Like he looks like we're in, look, it definitely, he's most likely in that stage 2. And there's some adjustments here that he can make that can have a huge impact on his bottom line. Out of curiosity, after a sample size, how long can one expect to spend back testing? I'm assuming a few hours. Yeah, I mean, for a single month or sample size, I mean, as long as it takes. I mean, it's just a matter of going through it all. But you're doing it once a month. So I usually just, you want to just do it on the weekend, spend the weekend back testing. Maybe Saturday is just the data and the charts, and then, or you can do it a number of ways, but, probably a couple of hours, but keep in mind, it's temporary. So, it's kind of like one of those things as long as it takes, there's a lot of good information here. Yeah, so really good trade journal there, man. I think next Thursday I think we continue looking at his. I think we continue. We dive into finishing. We're just going to dive right into it. We're going to go through all of that because I would like to go through this, and he can look at it and see the changes that we've talked about, and then see how his next sample sizes look after he's made the changes. I think that would be really cool. Because I want to see, I want to do this and see the progress that people are making and watch people transition into that 3rd stage. So I think that would be really good. I think that would be really good. Learned a lot from his journal. Yeah. So, I mean, his journal was really good. I mean, one thing I would probably do is, his snapshots were there. I like how he has the higher time before and after. I would just add some notes on there and some confirmations, and but overall it was really good. So
hi everyone.
Hold on, they can't see you. There you go. Say hi everyone.
Hi everyone.
You got George.
He's tired.
He's tired. Is it nap time?
Yeah. You still didn't get that monster in your bathroom back.
Don't worry. Okay, hold on, Bubba, all right? We're just ending up, okay? Everybody's saying hi to you, but you got to stay here. You can't touch anything. So do you guys enjoy this call? I mean, I think we covered a lot of really good stuff. So next Thursday, what we'll do is we're going to go through. So we went through 2-3 trades of his. I want to go through the rest of those trades. So we got about 10 trades. So we'll just jump right into it next Thursday and hammer out those 10 trades. He can watch that, and then we can go over the changes and write our own little summary and changes that he needs to make to his trade journal. Oh, he's on here. Surreal just managed to get on the live and was faced with mine. So really good trade. I watched the recording, man. So really good journal here. So what we're gonna do, Nick, is we're gonna finish. We didn't get through a lot of stuff because I was ranting. We went through 3 trades, but you have some slight adjustments to make, man. It's literally slight adjustments, and that's gonna send you where you need to go. We're gonna back test the rest of this month's trade journal next Thursday. And then we're going to write up all the strengths and weaknesses and things that you need to make to change in your trade plan, and then apply it to the next month, and then record all those trades. And then we're going to back test it again, because I think this is a really good journal. And I think you're on the brink of getting into stage 3. So that's the plan. We're going to do that Thursday. And then, you could probably start the second half of this month. Well, might not be good with Thanksgiving, but you could do it, maybe end of November into December too, and we could just, follow up. Maybe if worst case, just into January. Very honest comments in the journal. Yeah, I mean, you have to be like, that's the most important thing. You have to get honest with yourself. If you're not getting honest with yourself, you're not going to be able to, you know, really make the necessary changes. So really, really good stuff here. But Emma's typing in the journal. You can't do that. Hopefully it will help some people too. Absolutely. These are really good calls. So we're going to call it there. Hope you guys enjoyed the call and got some value. Nick, thank you for sending the journal. We're going to continue with your journal next week and go through all of that. Stop touching his journal. You're going to mess up his journal. You're going to mess up his journal. Emma's messing up some of your stop loss sizes here, dude. Sorry. I'm trying to undo. Hold on. I will see you in your room in a minute. You're messing with his journal here. Okay, so we lost the stop loss size, but we'll figure it out. Other than that, we're gonna call it. Oh, she knows how to refine my entries. That's funny. Cool. All right, so we're gonna end it there. Hope you guys enjoyed. This was a really good journal, man. I'm glad I pulled yours up today. You have some slight things, man, we just need to work on. And I liked what I saw. Your directional bias, man, it's on point. It's on point. When you have that down, that's the best part. You just have to make some adjustments. You make some adjustments, man, like it literally can be like a handful of trades, 1 or 2 trades and a sample size like this, but with a break even stage 2 trader that can just make all the difference and really not just send you to stage 3, but you know, right into stage 4 and just scaling and finding that consistency. So really, really good stuff here, man. So we're going to call it there. Again, good session, man. Good journal. Good work with everything you're doing there. I'm really happy with what I see there, and we'll continue this Thursday. So take care, everyone. Hope you all have a great day, and I will see you in the next one.